Welcome back. Closing bells have rung, so let's take a look at where we closed the day. In the green across all of our major indices, we are up 0.75%, closing the S&P 500 at 6359.05. The Nasdaq closing up about 0.5% at 23,162.41. The Dow up more than 1% on the day. That's closing at 45,1060, and the Russell, our big gainer on the day, up 1.5%, closing at 2283.14. Now I'm going to bring in our closers panel. We are going to have a big earnings day coming up here in just moments, seconds, hopefully, as we're about to get Alphabet, Google's parent company's earnings. George Tsilis is with us right now, our senior markets correspondent, and Scott Durfey, our senior manager of trading services at Charles Schwab. We are at the ready, waiting for this, waiting for Alphabet's earnings to come out right now. Big expectations. Alphabet and Google were about to get the preview from the Mag 7, the first of the two, and IBM as well coming out at 3:10. So we'll have a couple minutes gap in between. But, George, I'll start with you. Expectations from Alphabet, and what are you looking for most?
Well, I think the expectations, if you look at the price action, it's actually not hitting new highs alongside the rest of the market. I think the evolution of the aspects of search being the dominant search engine, 92% of total search globally is between Google and YouTube. Other questions about AI, ChatGPT, and all the competition associated with that dominant position the company's has. I think the company has to demonstrate something else besides search. The actual total advertising sales of Google is around 74%, and that's actually decreasing over the past year from over 80%. So I think everything else is really riding on Google. I think that has to do with their position with Gemini and artificial intelligence, but also other areas, which includes its driverless technologies, Waymo, quantum division as well. So I think George, that everybody will be looking at everything besides that. Yep.
They are out. Their second quarter EPS beating estimates here, coming in at 231. Versus the expected 181 year over year. The estimate was for 218, so a significant beat there at 231. The revenue ex-TAC is $81.72 billion. The estimate was for 79.6. Overall revenue is $96.43 billion. That's up 14% year over year, and beating the estimates for 93.97. Lots of beats here. I'm going to keep them coming for you. Google Services revenue up at $82.5 billion. That's up 12% year over year, beat estimates. Google advertising revenue, $71.34. That's up 10% year over year. Beat estimates here as well. Google search and other revenue, also a beat by more than $2 billion, up 12% year over year. YouTube ads revenue also beat, $9.8 billion, up 13% year over year. Google network revenue, this is down year over year to 7.35, but did beat estimates as well. Google subscriptions, platforms, and devices revenue, that was a watcher that we were talking about here. This coming in at $11.2 billion. That's up 20% year over year and beat estimates. Google Cloud revenue, also a beat here as well, up 32% year over year. And other bets, which is where Waymo would fall in this category, at $373 million. That's up 2% year over year, but fell below the estimates there for 429. Now, we're just getting these in, but George, I'd love to get your initial thoughts here.
Well, I think the market's still mixed on this one. I think the overall search revenue came in above estimates, if I'm not mistaken. But I think maybe the other component, like I said just a moment ago, the other aspects of Google's business is really what everybody's looking at, because they are, losing their competitive market share in dominant search and advertising, because their total advertising, total revenue base of advertising is about 74%, and it's been in decline. So the advertising space is becoming very competitive with the other conglomerate names like Amazon and, of course, Meta platforms encroaching on their business. So it comes down to whether or not they can demonstrate some improved guidance, both on EPS and sales, and which divisions that they're making these improvements on, because that's what everybody's looking at, considering even though it's still down compared to some of the other performers in the Mag 7 space, it's trading at a valuation that's actually quite low compared to its historical averages.
And Scott, I'd love to get your thoughts too as I'm getting farther down into the report here. Their operating margin came in right in line at 32% here, but CapEx much higher, 22.45 billion, up 70% year over year. Estimates there were for 18.24. What are your initial takeaways as you're seeing these numbers?
You hit it right on the head. So CapEx is one of the things that they really need to be careful of. Data center, TPU, tensor processing units that they have going. Investment remains really aggressive still. However, analysts are going to want to see if AI spend is driving revenue in search, ads, and cloud, just as George mentioned. CapEx, that could choke Google out a little bit. Now, it's a big company. They're not going to get choked out, but that CapEx is really something that they definitely need to be aware of and managing.
Yeah, absolutely. Any slippage there would have led to a lot of questions about all these AI data center investment. They are not reporting any slippage. Obviously, we don't have their guidance yet. Their call is at 4:30 Eastern. So lots of questions there. But I think overall, seeing a pretty strong report here, although, the market down about 1%, 0.5% right now. So digesting. But George, as you're getting a better look at the number, is there anything that's sticking out to you as a potential area of concern?
Well, I think if you look at the advertising revenue, like I said, it's starting to shrink relative to where they were even sequentially last quarter. I think the bright spot is YouTube revenue. That came in close to $10 billion. That's still picking up. I think the cloud revenue, which came in about $500 million above estimates, around 13.6 billion. There's maybe some softness there, but I think it comes down to the integration of artificial intelligence, the Gemini technology with their search. And there's, again, a lot of concerns about the encroachment of, ChatGPT bypassing the needs for search because of AI. So, but at the end of the day, I think it comes down to CapEx guidance. If that demonstrates some slowness, because $24 billion is quite a big chunk of for CapEx for the quarter, as it denoted. Operating margins are still quite robust, 32%, but it's getting closer to their net income margin, which is about 30%. So profitability for the business has actually been improving. But I think what's happened here is that the total EPS growth is really decelerating. This is actually the one of the worst quarters the company's had prior to what the release was, going all the way back into 2023, where they posted single digits in both sales and EPS.
And now we're starting to get some commentary. We don't have the call yet, but, the CEO is saying it's a standout quarter, robust growth across the company. I think there will be lots of questions about ChatGPT and the impact on Google search. That seems to be something everybody wants to know about. Scott, for you, as we're digesting some of these numbers and knowing that their ad business was, 76% of their revenue for 24, how are those numbers looking for you?
Well, you know what? I'm going to want to hear in guidance what we are expecting from YouTube. YouTube has really become, and George hit on this, but it's really become a foundational ad platform, especially on every TV screen almost. If that momentum can continue, it really gives Alphabet, in my opinion, a second leg up beyond search.
We're waiting for Tesla to come out. They're due out any second here. But, as we're looking at Alphabet's chart, the digestion process down right now on the day. They're looking at it now. We're also waiting on IBM as well. Oh, IBM is out. Here we go. Let's move to IBM. They are putting in their EPS at 280. The consensus was calling for 265. Their revenue, 16.98 billion. They were estimated to be at 16.59 billion. So a beat on both of those. Free cash flow, which I know was going to be a big flag for them. Lots of people waiting on this one. They came in at 2.85 billion, above estimates for 2.77. Their AI book of business stands at over $7.5 billion. They're saying they see fiscal year 25 constant currency revenue growth of at least 5%. Software revenue did come in under estimates, though, at 7.39 billion. But they have a bottom and top line beat. We're just getting in these numbers here. But, George, let's start with you. What are your thoughts here on IBM, and what were you keeping an eye on?
Well, I think for IBM, I was looking actually at their infrastructure revenue growth because it's a smaller component of their total business. Their software business is Their largest component, of course, are consulting. But I think the infrastructure side, where they're integrating, of course, hybrid cloud and artificial intelligence, IBM is also making an aggressive move into factory automation. So maybe this is a quarter where they're demonstrating some significant issues associated with capital expenditures. But I will say, going into this report, just looking at the earnings estimates for 2025 and 2026, stocks trading around 25 times the difference between this year and next year's earnings. It's quite rich compared to their 16 times historical average, at least on a 5-year basis. So moving into this quarter, I think the expectations were quite high, to be honest with you. Sales, it looks like, based on what they said, are coming in line. I had about 4.5% in terms of top line sales for the next 4 quarters. EBITDA margin growth expected around 6.5%. So you're basically looking at a company, it's 6.5% earnings growth on about 4.5 to 5% sales growth. So these are, again, in the mid-single digits. But for what it's worth, like I said, it's trading around between 25 and 26 times earnings, and that's quite rich. And I think there was a lot riding on this going forward, and maybe, again, valuation is a little bit pressing, and why we're seeing the reaction to the after hours.
And we've just got Tesla out. They are putting up an EPS miss right now. I'll read you these numbers as they're coming in. EPS of 40 cents below the estimation for 42 cents. Their gross margin coming in at 17.2%, was estimated to be 16.5. I know lots of eyes were on that. So, what that number will mean in terms of movement, not sure yet. Revenue coming in also below here, 22.5 billion, estimated to be 22.64 billion. So EPS down year over year, posting a miss there. As we're breaking in more of these numbers, they're just coming in right now. Revenue down 12% year over year. Also missed on estimates. Gross margins up 18% year over year, and did beat the estimates, though. And I know I covered Tesla a lot today. Lots of eyes were on gross margins and what their potential growth story looks like. Scott, what do you anticipate to be the reaction here? I don't think people were expecting a strong quarter, but margins were highly in focus.
Yeah, margins were probably the key focus, right? And for good reason. We've seen, I think it was in 2021 or 2022, Tesla was enjoying a margin on their cars of right around 30%. Obviously, that's not doable in today's market. And, they're competing against a lot of other companies. GE's electric vehicle is about $8,000 less than the Y model. We know that BYD, Bring Your Dreams in China, has really hit the EV segment in China, which has really hurt Tesla. So, none of this is a big surprise. We'll see. They're still kind of trading like a high growth tech company, but until they get those margins in those cars in line, they're going to be really struggling. They do not stack up in terms of how many times per earnings that they're trading against some of their other automobile companies. So if they're going to be AI and tech, then they need to step it up and be AI and tech. But right now, they're struggling with those margins in their vehicles.
And really interesting numbers, too, as their operating income comes in here, came in at 923 million, estimated to be 1.23 billion, and some announcements as well. There's Cybercab scheduled for volume production 2026, also saying they produced their 8 millionth vehicle in June. So it looks like right now, early talks are skewing some of this conversation into auto, which, likely the call will have a heavy focus on robotics. But George, what's flagging for you here? The market seems to like this one, even though the numbers aren't great so far.
Yeah, this is sort of a second quarter after last where we see the numbers come out actually quite poor in terms of, misses. I just think if you look at the estimates going forward this year, they were cut significantly. I mean, the estimates for EPS around $2.60, they cut back all the way to $1.80, and even next year below $3 at $2.75. Even as the stock prices dipped since late December, earnings estimates have been falling. Top line sales are down. I mean, this is a down. I think sales are down about 14-15%. EPS down about 23-24%. Earnings multiple is expanding even as the price is coming down. The earnings are being cut. So my point is there's a lot of bad news already out in this name. And I suggest, after hours today, there's not a lot of volume, even pre-market tomorrow. How the stock closes tomorrow is going to be very important, how it reacts after the initial open. Because this is ideally really a big software company. We have to consider that there's going to be autonomy in all vehicles eventually. Maybe Tesla becomes the preeminent one that licenses its software to all vehicles. But the integration of the robotics, the integration of potential of XAI, and of course Starlink, which is a different business, but that communications connection to the vehicles and all the AI and robotics infrastructure, I think the holistic view is quite bullish for Tesla in the very long run. But there are going to be some concerns because the primary revenue base is the auto sales. They're moving towards expanding their Model Y, a new version, and potentially a cheaper addition to more affordable cars going forward. They are telling us they're going to sacrifice margin. And lastly, I think what's important is you should expect margins to be down going forward because the vehicle tax credit, the EV tax credit, is going away at the end of September. So for what it's worth, they're probably going to be cutting prices aggressively, but they have more scalability, and I think that's important for this business going forward.
And George, you just mentioned that potentially more affordable vehicle that everyone has been waiting for. There wasn't an announcement already. The call hasn't happened yet, but they are going to do the first builds of that more affordable vehicle. We don't have a price on it yet. Maybe we'll get one on the call with volume production now slated for next year. So they are addressing that. But thank you both, Scott Durfey, George Tsilis, for being here to break down all of those earnings with us. Tesla having a positive response in the markets to their miss. IBM down about 3.5% right now after their report, and Alphabet posting top and bottom line beats, but down trading about down 1% right now as we digest all of those.